Aurora Cannabis Inc., NYSE, ACB, stock fell over 9% on September 12, 2019, as of 11:12 a.m. Greenwich Mean Time -4. Source: Google Finance, after the company posted mixed results for the fourth quarter of FY19. ACB has announced a fiscal fourth quarter net loss of $2.26 million with an adjusted EBITDA loss of $11.7 million, $8.9 million. In a separate filing, Aurora said that its net loss attributable to common shareholders was less than $200,000, with the rest of the losses attributed to two subsidiaries' non-controlling interests. ACB in the fourth quarter of FY19 has reported the adjusted earnings per share of less than a penny a share, beating the analysts' estimates for the adjusted loss per share of 6 cents, according to analysts surveyed by FactSet. The company had reported the adjusted revenue growth of 52% to $98.94 million in the fourth quarter of FY19, missing the analysts' estimates for revenue of $108 million. Moreover, during the fourth quarter, cash cost to produce per gram sold declined 20% sequentially to $1.14 per gram in Q4 2019. Production volume had increased 86% sequentially to 29,034 kgs. Gross margin on cannabis net revenue has increased by 3% to 58% sequentially. Aurora's medical patient base has expanded 10% to 84,729 sequentially. Earlier this year, Aurora executives had said the company was on track to achieve a sort of profitability. On an adjusted basis, the company would post a positive figure for earnings before interest, taxes, depreciation and amortization. Aurora adjusts its EBITDA figure for biological asset transformation, among other things. Meanwhile, Aurora's fourth quarter results arrive amid a swath of disappointing top-line results from the largest Canadian pot companies. Difficulties growing in packaging the plant have contributed to the lackluster start to legal recreational cannabis in Canada, as has the relatively small number of retail locations in provinces such as Ontario, the most populous. Other cannabis companies that purchased cultivation and other production assets ahead of recreational legalization last October. Aurora carries a substantial amount of goodwill on its balance sheet. Roughly $2.4 billion according to its third quarter financial result. Additionally, during the fourth quarter, ACB has closed an amended and upsized $360 million secured credit facility which includes an accordion feature that enables Aurora to upsize the facility by approximately $40 million. The company has sold its remaining 28,833,334 shares of the Green Organic Dutchman Holdings Limited, at a price of $3 per share for aggregate gross proceeds of $86.5 million, representing an approximate 50% internal rate of return for the company.